This is the World Financial Report podcast. My name is Randy Marshall. Joining us is our financial endowment expert, Harold Siegel. We're taping on March 29th, 2018. It's the Easter long weekend starting tomorrow, Good Friday, and Easter Sunday. I know in Canada, a lot of people have all 4 days off. And I know Harold is going to be off as well, so connect with him on Tuesday, 1-800-432-1022. 1-800-432-1022. The website is rarecoloreddiamonds.com. rarecoloreddiamonds.com. We believe in hard assets. We'll talk more about it throughout the show. Get our free weekly newsletter from Harold, the companion to the podcast. You'll see all the material that we're reading to you, and you can spend minutes or hours going through the material and be completely up to date financially, geopolitically. U.S. dollar is at 89.94, as Harold was saying to me just prior to the show starting. Just seems to be stuck in that range. Canadian dollar, 77.48. Gold at 13.28.80. Silver, 16.22. Gold-silver ratio is up to 81 now. Very extreme. And it's interesting to note, platinum and palladium, they are getting closer in price. Platinum, $9.34. Palladium, $9.64. WTI, $64.56. Brent, $69.50. Nat gas, $2.75. Bitcoin in the United States, it's dropped below 7,500. It's at 7,506.78, below 8,000 now. Bitcoin in Canadian, 9,696.59. The Dow at 24,006 this morning. S&P 2,621. NASDAQ 69.55, and the TSX 15,231. A lot of volatility in the stock markets during the week. In fact, to give you an idea, almost 40% of the market value created during the Trump rally is gone. It's been an ugly couple of weeks for the stock market after dropping 5% for the week ending March 23rd. Stocks jumped 3% on Monday and gave almost all of it back on Tuesday. Markets are now sitting just above where they were in early February, when the stock market dropped 10% in just a few days. And with this past week's latest leg lower being led by big tech names, notably Facebook, the total market cap for the S&P 500 has shed since late January almost $2 trillion. This drop has also erased almost 40% of the market cap gains the S&P has enjoyed since President Trump was elected to office. So you're starting to see a lot of money being taken off the table due to the pullback. Trade related, people spooked on the trade front. Facebook caught in their scandal. From Election Day 2016 through the S&P 500's last all-time high on January 26th, the index added $6.3 trillion in market cap to take its total market cap up to $25.46 trillion, according to analysts at Bespoke Investment Group in a blog post. Since the high on Jan 26, the index has now lost $2.34 trillion in market cap, bringing the total down to $23.12 trillion. That means 37% of the post-Trump gains in market cap have been erased during the current market pullback. And Harold, we've seen the markets very spooked on trade concerns. The Facebook scandal is going very, very strong. So it will be interesting to see as we move along throughout 2018 where the markets go.
You better believe it. And the stock market going up was Trump's ace. It was something that he was always touting. And now that those gains are basically gone, he's got nothing else to really rest his laurels on, type of thing. But no, the markets are not doing much at this particular point. Gold was very strong at the beginning of the week, got all the way up to 1360, which was shocking on, believe it or not, inflation concerns. However, the rest of the week, the market had fallen off fairly heavily is back down to 13.23. So we've seen basically about a $30 to $40 swing in the price of gold. Now, again, we're watching gold very closely. We're actually recommending gold at this particular point to own physically because it's very possible with what's going on in the world markets right now that gold could take off. You know, the fact is that the markets don't just look right, You know, when you raise interest rates, when a country raises interest rates, it strengthens the dollar. And one of the major reasons for raising interest rates would be the fear of rising inflation. So if the fear of rising inflation is here, in actual fact, the inflationary numbers in the States actually were very strong this week. The fact is that gold responded to it at the beginning of the week, and then they sold it off at the end of the week. So it was up as high as 1360, is trading right now at 1323 with a low of 1320 today. You've literally seen a $40 swing in the price of gold. Silver's done really nothing. It's sitting in the 1630 level. It is odd that platinum and palladium are almost exactly even at this particular point because where platinum was always the strongest metal, back in the late 70s, early 80s, when we really started taking notice of the metals, and we saw that huge move in gold and silver and platinum and everything back in 79 and 80, when gold hit $850, platinum hit $1,100. So platinum was always more expensive than gold, but that has definitely changed. And in fact, gold was way stronger than platinum, especially in 2009 to 2011. But palladium came back very strong because platinum and palladium are basically used for the same thing, very strong in the catalytic converter industry. So when platinum prices were at $1,100, $1,200, $1,300, palladium was much cheaper. So the car manufacturers started buying palladium instead of platinum, and the price of palladium started to increase. There's really an unbelievable time in palladium. When I first started trading palladium, probably 25, 30 years ago, the fact is that palladium was under $100. When I first started recommending palladium, it was at 70 some odd dollars. We rode that market all the way up to 1,100. It was one of the biggest bull markets, along with gold and silver, that we've ever been involved in. So the fact is that you really have to watch the gold market at this point because there's a lot of problems in the economy. You've got manipulation in the market for sure in the currency markets because how do you raise interest rates and the currency doesn't change? It's literally impossible for that to happen. You know, there's always an action-reaction to almost every situation, and a rise in interest rates will strengthen the U.S. dollar. The only currency that the U.S. dollar is strengthening against at this particular time, even though they've raised interest rates, is the Canadian dollar. And even though the Canadians government has raised interest rates in the past, the fact is that we haven't seen any major interest rate hikes recently. And it's obvious to us that the Canadian government wants a weaker dollar to make their exports more attractive type of thing. That's the same thing that the U.S. is going after, but President Trump is so aggressive and, again, such a bully type of thing that this, I think, is going to blow up in their face because when all of a sudden you start attacking your biggest customer, China. Now, China, not that they're without fault, they certainly are. And the fact is that President Trump last week talked about sanctions on them and as far as trade wars goes and things like that and putting tariffs on steel and other products coming from China. That's when you saw the heavy decline starting to happen in the stock market. Along with the fact that if that does happen, don't you think that it's possible that China, who holds almost all of the United States debt, has been the biggest buyer of their bonds for umpteen years now, is going to start to hurt the U.S. any way they can financially? Again, at this particular time, you don't need enemies like that, and that's exactly what Trump has. He's got enemies in China, Iran, other parts of the world, and now it looks like Russia could be added to the list type of thing. So I'll tell you something, the markets don't look that good to me. The stock market doesn't look that great at this particular point. It's sitting under 24,000, and the fact is that we could see a strong rally in gold. We saw it at the beginning of the week. If we start to get inflation, and at that particular point, I think the gold could not only test the 1900 level that we've seen in the past, which was the highest point the gold hit back in 2011. It hit 1920 before the exchanges and the government basically caused the market to fall. Otherwise, we felt the gold was on its way to 2,000 to 2,500, and it could easily do that. If the conditions are right, gold could have gone to 4,000 to 5,000. So don't forget, when we first recommended gold back in 2000, it was the beginning of a massive bull market that lasted 11 years. It was the biggest bull market in history. That gold went from $250 to $1,900, and again would have continued if there wasn't skullduggery in the market. If we're starting another bull market, and if there's a chance that gold is going to really take off at this particular point again, we're taking off from 1,300, not 250. That means the next level of prices for gold would be to break 1,900 and then start to go on to 2,000, 2,500, and so on. And again, if inflation picks up and the currency markets heat up, you could definitely see this gold market take off. We only recommend that you buy physical gold. You know, we have physical gold in kilo bars. So unfortunately, at this particular point, it's not for everybody because a kilo of gold sells for about $40,000. However, a kilo of gold with no commission and no spread and buying and selling at the same bid price is something that will put a lot of additional dollars into your pocket and make your break even really at an unbelievable level. Because if you're not paying commission, which we don't charge commission, and you don't pay a spread between the bid and the ask to buy or to sell, that means that if you buy gold at 1,300, at 1,301 penny, you're in profits. And that's the way that we want it. We want our listeners to our show and our clients to be in gold on this next major run. And because of a strong situation in our partnerships that I have with my partners from Venezuela, we're able to bring to you kilos of gold at prices that nobody else would be able to bring to you. So I think that it's very possible. We're starting to see those big moves where we're starting to see gold make a $20, $25 move in a day. We've seen times when gold has moved up over 100 in a day. So don't think that gold couldn't just take off with the right situation. Again, I'd rather be 5 months early than 1 day too late to be into the next running market. I like the gold market at this level.
About investing in hard assets. The telephone number, 1-800-432-1022. 1-800-432-1022. His website is rarecoloreddiamonds.com. rarecoloreddiamonds.com. One of the quotes we have in our free weekly newsletter is from Richard Russell, who passed away in 2015. He wrote the Dow Theory letters for approximately 60 years. He said, in the end, capitalism will collapse due to the unbelievable amount of debt that is currently being created. This will create monster inflation that will destroy every currency. The only currency that cannot be destroyed is gold. And we would argue probably you could put silver and diamonds in there as well. When investors realize this, we'll have the makings of the greatest bull market in gold ever. That according to Richard Russell. And we speak of debt. We touched on it on the last show. As we've said before, invest in things that governments cannot print. We're talking about hard assets. It didn't take long for the U.S. to rack up another $1 trillion of debt. It has taken a little more than 6 months for the U.S. national debt to grow by $1 trillion. A quick clip that has little precedence over the nation's recent history. Last week, the debt hit $21 trillion for the very first time. And then, of course, we had talked about it. It did end up happening. Donald Trump did sign the bill that kept government going. It was a $1.3 trillion federal spending measure. Last Friday, averted a government shutdown. He had said that he might not sign it. He did end up signing it, but there it is, another $1.3 trillion. But I thought it was very interesting. The story that I came across this week, it is in the newsletter from CNN Money. Uncle Sam needed to borrow a ton of money this week in the middle of a fight with its biggest creditor. The United States was planning to sell about $300 billion of debt, according to the Treasury Department. That's the highest for a week since the record set during the 2008 financial crisis. Now, the Federal Reserve is declining because of President Trump's tax cuts, so the government needs to borrow more to make ends meet. At the same time, Washington's borrowing costs have climbed rapidly in recent months because of the interest rates going up. The amount of debt coming on the market this week is extremely large, according to Rick Reeder, and he's the global chief investment officer for BlackRock, the world's largest asset manager. The government is auctioning all the short and longer-term debt at an awkward time. Last week, Trump vowed to impose wide-ranging tariffs on China, which owns most of the Treasury bonds and most of any foreign country. China responded by saying it would fight any trade war to the end. When asked by Bloomberg whether China was considering scaling back purchases of U.S. debt, China's ambassador to the United States says, "We're looking at all options." China holds $1.7 trillion of U.S. debt. It trimmed those holdings by 1.4% between December and January, the latest data shows. But Harold, you talked about this on the last podcast. If China stopped buying, if China started to dump U.S. dollars, we could really be in a situation where people would be very happy that they owned gold in their portfolio.
Oh, you better believe it. I mean, the ramifications from China dumping all those bonds would be devastating. Not buying is one thing, but dumping is another. That means that the U.S. would be buying back its own debt, and they don't have enough money to do that. That defeats the purpose of of selling these bonds. So I think they're in trouble. I think this is going to be a major issue. You know, he doesn't think before he does things, because that was an obvious. I mean, that is so obvious that if you're going to get into a war basically with China, and they're your biggest customer, I just don't understand the logic behind that. I mean, it makes absolutely no sense. So the fact is that I always felt, not at the beginning, because I voted for President Trump. I thought that he was going to do a great job. Now it's very concerning, and it's almost comical to see what he does on a daily basis. And then, you know, instead of dealing with all the problems and everything that's happening with the U.S. and around the world, he's in a fight with Stormy Daniels, a porn star. I mean, this is so counterproductive, embarrassing, and idiotic. But this is the direction that the country seems to be going in. And if we start a war with China, an economic war, and also with Russia because of Russia's hacking and everything like that, the fact is that the economy and the markets overall could be hurt tremendously, which is one of the major reasons right now why we're saying start to buy some gold. You know, put gold away for safety, because the thing is with the stock market and most of the general public, you know, they see the market starting to run. They didn't get in when it was down at 6,500. They were selling at that point. And then as the market gets to where it is, 24, 25, 26,000, the general public really can't afford to buy the stock market. They can't afford to buy Google or Amazon or Yahoo or these stocks that are way up there, just like they couldn't afford to buy Bitcoin. So the fact is that the market could fall substantially, and we saw a hint of it just last week or a couple of weeks ago when they started talking about the tariffs on China and on the steel market and everything like that, because there's many, many, many U.S. companies that deal directly with China. And that's why you're going to see that type of volatility in the market. My suggestion is, and the point I was trying to make, is that most people don't know when to buy or know when to sell. They don't use stop losses in their positions to protect themselves. They're basically just sitting there, because a stockbroker will say to a client, listen, stock market always comes back, and he'll point back to history. But depending on how old you are and how much time you have until retirement or whatever, you may not have that. And to see the market go from 25,000 and maybe drop down to 15,000, which it could easily do, the fact is that most people would get caught up in that type of downdraft. So most people don't know when to buy don't know when to sell, nor do they have any protection in their position whatsoever. They don't use stop losses, or they wouldn't buy a hedge against a declining stock market like gold. And we saw, again, a market this week in gold that rallied at the beginning of the week, and we saw some huge days, and then we saw it sell off at the end of the week. The dollar is not moving, and that's a concern, because when you raise interest rates, the dollar is supposed to respond to that. What happened to buy the rumor, sell the fact type of thing? Rumors were there was going to be 3 interest rate hikes this year, at least. We haven't seen one increase in all reality in the price of the U.S. dollar. Now, for my clients, the best scenario is a strong U.S. dollar, because most of my clients are invested in U.S. dollar-based investments. So a stronger U.S. dollar is beneficial to my clients, and a weaker Canadian dollar means that when we cash in our investments, that we get more back because of the strength of that dollar. But the U.S. dollar should be rallying against the euro, and it isn't. In fact, the euro has picked up a lot of steam. So, again, I'm very concerned about what's going on right now with the bond market. I believe that China is not going to sit back like a lame duck and do absolutely nothing. I believe that we're going to see some economic wars, and the markets I would like to be in is hard assets that are not controlled, they're not paper. And the fact is, I believe the next bull market is going to take us to levels that nobody has ever seen before in gold.
Speak with Harold about investing in hard assets, gold, silver, diamonds. 1-800-432-1022, the website rarecoloreddiamonds.com, 1-800-432-1022. And it is interesting to note, we had in our last newsletter and mentioned it on the podcast, that it is very difficult to make money. In fact, 95% of the professional Wall Street traders, and we're talking about mutual fund managers, hedge fund managers, do not beat the market. And we're starting to see a lot of them shut down and return money. Paulson did it. We have another hedge fund manager, Alan Fournier, returning capital at his $1.5 billion Pennant Capital Management after almost 2 decades, citing poor returns. Well, I take great pride in our long-term returns, especially in light of our consistent low-risk portfolio structure. Our recent returns have been disappointing, and he is throwing in the towel. And we're seeing a lot of hedge funds do that because of the crazy times we're in financially and geopolitically. It's hard to beat the markets. That's why people are going into passive investments like index funds. And that could be the next crisis. Everybody in index funds and no one really managing money. That could be something of the future that we need to keep an eye on. But we really believe in hard assets in a portfolio as well. You need to have gold, silver, diamonds, and Harold will be happy to speak with you about your personal situation. Give him a call, 1-800-432-1022. Call is free, and anything discussed is confidential. The website, rarecoloreddiamonds.com. Now, I saw this story this week, and it is in our free weekly newsletter. I was so excited because I love diamonds, and I love diamonds with a great backstory. Provenance. A royal blue diamond hits the public market for the first time in 300 years. You heard right. When I saw that story, I was so excited because I wanted to bring it to today's podcast. Over the last 300 years, it's passed through the hands of royals from 4 European dynasties. But in May, the 6.16 carat Farnese blue diamond will go on sale for the first time in the history at Sotheby's auction. Think about it. First time in its history at auction. The pear-shaped fancy dark gray-blue diamond was unearthed from the Golconda mine in India, where the Hope diamond was discovered. It was originally gifted to the Italian-born Elizabeth Farnese, Queen of Spain, in 1715, following her marriage to King Philip of Spain. It would be passed down through more than 7 generations And as Elizabeth's descendants married into other European families, journeyed across the continent, traveling from Spain to France to Italy to Austria. At key points, it adorned a tie pin belonging to Charles II, Duke of Lucia, and a tiara dressed with diamonds, thought to have belonged to Marie Antoinette. And yet, for much of history, the diamond was known only to family members and the jeweler who tended to it. Next month, a family descended from Queen Elizabeth will be selling the stone at Sotheby's Magnificent Jewels and Noble Jewels auction in Geneva, with the upper estimate at 5 million Swiss francs. That is 5.27 million US dollars. Now, David Bennett, who's the chairman of Sotheby's International Jewelry Division, suggests the diamond could sell for more. 75% of the jewelry sold in 2017's Magnificent Jewels and Noble Jewels sale exceeded their top estimate. Royal and noble collectors have traditionally had access to the finest gemstones available, so the gems which adorn these pieces often display the very highest quality, size, and rarity. They are fragments of history, and I love that line, fragments of history that are currently greatly, obviously being sought after, great enthusiasm for jewelry of this type. The Farnese Blue will go on display at Sotheby's Hong Kong as of today, will be exhibited in London, New York, Singapore, Taipei, and Geneva before the auction. And Geneva, they always have those two sales, Sotheby's and Christie's. And Harold has Sotheby's come up with a home run finding this diamond, obviously getting someone to put it up for auction. But this diamond, I would be stunned if it doesn't go for 10, 15, 20 million dollars. Would not surprise me in the slightest.
No, I'm with you on that, Randy. And the provenance on that diamond is just phenomenal. So, again, just another example of an amazing blue diamond doing well. Blue diamonds have done just tremendously well over the last 10, 15 years. I've never seen an asset increase as much as high-end blue diamonds. And I believe that we're going to see the same with pink diamonds because of the Argyle mine and green diamonds coming up. I just believe that the more volatile and unpredictable the markets become, it's going to price out the general public, and they're going to look at alternative assets. Alternative assets like gold and diamonds and art and classic cars are a very important way to invest. You know, the fact is people feel comfortable trading stocks or commodities where they can check the prices every day. But the fact is that a lot of those markets are not for the general public. The majority of people that trade the stock market, as an example, lose their money. 90% of people that trade stocks lose their money. So how is that good for the general public? You've got to diversify and put yourself in a position to protect what you have and give yourself an opportunity to profit when those opportunities arise. So again, that's just an amazing story on that blue, Randy. I read it. I loved it. And again, just brought a big smile to my face.
I would encourage people to get our free weekly newsletter from Harold. Connect with him, 1-800-432-1022. We'll send out the newsletter to you free of charge every week. We can send it out on a one-time basis if you want. But in there, read the article on the Royal Blue Diamond. First time in 300 years, there's a picture of it, the showcase box, just absolutely stunning. This is what gets me excited about diamonds. When I read that story yesterday, I was just so excited to bring it to you on today's podcast. Now, in New York City, April 18, Magnificent Jewels at Sotheby's, New York, they have a sale coming up. There's a sale actually next week, and we'll try and keep an eye on that, see what happens. An important, fancy, intense pink diamond ring, and it weighs 7 carats. They have an estimate on that of 4 to 5 million. There's also an important, fancy, intense, orangish pink diamond ring, set with an emerald cut, fancy, intense, orangey pink diamond weighing 7.37 carats. The estimate on that, 3 to 5 million. A rare, fancy, intense blue diamond ring, cut, cornered, rectangular, step cut, fancy, intense blue diamond, weighing 3.47. Estimate 2 to 2.5 million. And a fancy, vivid yellow, orange diamond ring, set with a shield-shaped fancy, vivid yellow-orange diamond weighing 5 carats, and the estimate on it, $750,000 to $1 million. That sale coming up April the 18th. And definitely speak with Harold about investing in hard assets, diamonds, gold, silver. Learn more. 1-800-432-1022, 1-800-432-1022. And as we get to the end of our podcast, there's one final story that I wanted to get to. And this is probably one of the strangest stories I have seen in a long, long time. A French waiter fired for being aggressive. French waiter being aggressive? What? Rude and disrespectful. Says his behavior wasn't out of line. He's simply French. He worked at a restaurant in Vancouver. He was very rude to his coworkers, supposedly was very nice to the people that came in as clients. But he was fired due to being so rude to all the people around him. Now, he is only in BC, and I grew up in Kelowna, so I can say this, only in BC, filed a complaint with the BC Human Rights Commission against his former employer claiming discrimination of culture. Sure, I may be rude, but hey, I'm French. Harold, only in Canada, they say.
That's hilarious.
It is, absolutely.
You know, it's just funny. People sue for any reason that they possibly can. It's an unbelievable time in history to think what people will do to either make a point or to get money. And most of it is the money type of thing. So it's just incredible, Randy. I just shake my head when I read those stories.
The truth is, you're right, Harold. Anybody can sue anybody, but at the end of the day, you have to have the facts on your side. If you don't, you can get a big whopping judgment against you for the other person's costs, and then they can go after you. So be very, very careful. I know that a long time ago, I was sued along with a large group of people, and we were in the right. We did not do anything wrong. We were dealing with, let's just say, a unique personality, and we got a very large judgment against him. So yes, it's a crazy, crazy time. But Harold, we want to wish everyone a happy long weekend. Easter Friday, obviously, Good Friday and Easter Sunday, and wish everybody a great long weekend.
You bet. I wish everybody a wonderful long weekend and a very profitable day.
Connect with Harold at rarecoloreddiamonds.com. Speak with him personally and privately, 1-800-432-1022. That's it. Another edition of the World Financial Report podcast with me, Randy Marshall, and Harold Siegel. We will talk to you next week.